In the thrilling realm of financial markets, there exists a tale of extraordinary accomplishment and an uncanny ability to transform humble beginnings into staggering wealth. Join us on a mesmerizing journey as we uncover the remarkable strategy employed by a renowned figure, Larry Williams, who harnessed the power of day trading to defy all odds, turning a modest $10,000 investment into a jaw-dropping $1,100,000 within the span of just 12 months. Brace yourself for an enlightening exploration of the mind-bending techniques, the calculated risks, and the unyielding determination that propelled Larry Williams to the pinnacle of success in the fast-paced world of trading. Get ready to witness the astonishing story unfold, captivating both novice and seasoned traders alike, as we delve into the depths of this captivating saga of financial triumph. Before we start, if you're looking for easy-to-follow trading indicators with a proven win ratio of over 80%, EasyAllGo has everything you need. 90% of traders lose money due to lack of emotional discipline and not having a back-tested strategy that works. EasyAllGo takes the guesswork out of trading, giving you real-time, non-repaint signals so you can accurately identify profitable entries and exits. These indicators are trusted by thousands of traders. Joining EasyAllGo also gives you access to a private community of experts where you can copy signals, chat about different ideas, and learn trading 10 times faster. Check it out. We'll leave the link in the comments. First, we are going to see the strategy more related to Larry Williams when we talk about him. And this strategy is called Breakout Volatility LW. It is a strategy based on the maximum and minimum prices that occur in the day. For this, we are going to add the donkey and channels indicator created by TradingView. This indicator shows us automatically and visually the maximum and minimum that the chart does. We are going to look for the maximum and minimum that the market makes every 8 hours, that is, we will look for trading, scalping, and day trading. And for this, it is important to understand how the indicator settings work. We must know that 8 hours are 480 minutes. So if we are in a 5-minute time frame, our indicator length should be 96, because 96 times 5 gives 480 minutes. If we are in a 30-minute time frame, our length must be 16, because 30 times 16 equals 480 minutes. If you want to use time frames longer than 1 hour, then the length of the indicator should be 20, as the indicator comes by default. Now we are going to modify the style. In the upper and lower options, we are going to change its color to white, so it will be more visible. As we can see, the indicator draws an upper line when there is a maximum, and draws a lower line when it detects a minimum. The middle line is the average of the bottom line and the top line. It also helps us to see if the price has bullish or bearish momentum. The first way to trade this indicator is to see the price sideways for quite a while after a strong move. In this case, we are in gold with a time frame of 5 minutes. We see that the price fell sharply and then remained sideways. We are going to look for the first bullish breakout, and that happens on this candle. So we take a long trade. We set our stop loss at the middle line. And our take profit will be with a risk-reward ratio of 1 to 2.5. We see that it was a winning trade. Let's see another example. We are now on Netflix with a 5-minute time frame. We see that the price has risen a lot, but in the last movements of the market the price has ranged. So we are going to wait for a bearish breakout of the donkey and channels. And we see that this breakout occurs in this candle. So we take a short trade. We set our stop loss at the middle line. And our take profit will be a risk-reward ratio of 1 to 2.5. It was a winning trade. As you can see, this trading strategy alone gives very good results. But let's see another way to trade with this indicator to get better results. Let's add 2 indicators. First, we are going to add an indicator that Larry Williams himself mentions in his book called Trade Stocks and Commodities with the Insiders. We look for the indicator in TradingView and it is called Larry Williams Large Trade Index. We select the one that was created by Locks. The next indicator is the volume created by TradingView. We are going to modify our indicators. First, we are going to modify the Larry Williams indicator. We changed its period from 8 to 25. We leave the smooth LWPI disabled. In this way, smoothing period will not affect the indicator. And then we are going to enable the color bars option, but this is a personal option. In this video, I am going to select it so that the signal is more visual. Then we are going to modify the volume. We change its length from 20 to 30. Then we go to the Style section and enable the moving average and change its color to white. Now the strategy is ready to be used. Let's see some examples. For this strategy, we are going to use also basic knowledge of technical analysis. In this way, we are going to improve our win rate. So the objective is to look for support and resistance, and when the price breaks these zones, we are going to look for it to also break the Donchian channels. Now we are in the Eurodollar with a 5-minute time frame, and as we can see, the price has support in this area. And we see that the price has broken through this zone and also the Donchian channels with a bearish bias. So we have to see that the Larry Williams indicator shows us a bearish signal. And we must also have enough volume. So we take a short trade. We set our stop loss at the middle line. And our take profit will be a risk-reward ratio of 1 to 2.5. We see that it was a winning trade. Let's look at one more example. Now we are in Bitcoin with a 5-minute time frame, and as we can see, the price has resistance in this area. And we see that the price has broken through this zone and also the Donchian channels with a bullish bias. So we have to see that the Larry Williams indicator should be green. And we must also have enough volume. So we take a long trade. To set our stop loss, we have to see if it is closer to a swing low or the midline. In this case, it is closer to the swing low, so we set our stop loss. And our take profit will be a risk-reward ratio of 1 to 2.5. We see that it was a winning trade. I hope you have understood how Larry Williams was able to make great returns so that you can replicate it. Until the next video, happy trading!